Judah, you're muted. You're unmuted, please.
Thank you for that, Selena. The background to this webinar is an interesting one, in that we were meant to have a live session with many of you in Maputo a few months ago, and as has occurred to many events over the past several months, we were compelled to reschedule for safety reasons. And the plan is still for the event to take place in Maputo in 2021, but rather than lose momentum, the idea was to try and initiate and continue the dialogue around many of the same issues that we were going to discuss at the webinar, but now to try and break them down into specific topics to allow for a more digestible format. So this is the first of what will be at least 2 or 3 webinars that we will be holding between now and the event in Maputo. And the opening for this discussion, and perhaps it's not a surprising one, is to try and to unpack what the impact has been, the early observations on what this pandemic has meant in the sub-Saharan African context. And we have several distinguished speakers today and distinguished members of a panel, and this is the beginning of what's going to be a discussion to take place over the coming months. So just a word on Mondato, for those of you who don't know us. We're an advisory firm that focuses on DFC, digital finance and commerce and fintech, particularly in emerging original insight, which all of you will receive if you don't receive it yet. And we also convene sessions across the ecosystem. And in fact, this is one of the first digital webinar seminars that we've convened. Usually we do this in person, and we do this in Africa and Asia and other regions annually. So, when we talk about sort of the impact of COVID, I think it's important to take a step back and to remember what the world looked like before COVID. And I think many of us struggle. We're in this purgatory of COVID now for many months, and it can be difficult to remember what the scene looked like in early 2020. So just as a brief reminder, this topic of digitization pre-pandemic was a hot topic. And there was a lot of discussion in public sector quarters and the private sector, obviously, as well, around digitalization, digitizing, sort of digital evolution. And so this is not a new concept. And we saw that it was, the early adopters and even sort of the next stage adopters were moving quickly, and especially in the mobile industry, as you can see on the bottom right of this slide, the number of mobile money implementations across the world, and in particular in Africa, which comprises about half of the mobile money implementations, was something that was well advancing. And the advancement was to such an extent that there were even discussions, and certainly discussions are still in the headlines today, around digital supremacy between different countries. And obviously folks are aware of the issues between the US and China, but this is not a unique sort of corridor of competition. A lot of this discussion is taking place across many of the different markets in the world. So nothing new there in terms of digitizing being an important concept. The interesting bit, which some of you may be aware of, is that with the pandemic, there's been an incredible spike in digitization and in digital finance in particular. And this is just to share with you some of the, the headlines and news that you may be exposed to. I think I would start with what the CEO of Microsoft said a few months ago, which he said, we've seen 2 years worth of digital transformation in 2 months. And he may even be understating the impact, despite that being, quite a strong statement. We've seen the uptake of sort of delivery services and e-commerce and m-commerce and trying to move faster with AI and robotics, and really to try and find ways to keep folks safe and working from a distance, but still to sustain services. And just as a proxy, you have more than 50% of Americans that have expressed, at least based on some research, that have expressed concern about even touching monetary bills, and 60% have talked about using touchless payments. And we've seen similar numbers coming from other regions of the world, including in Africa and many of the markets, where there's a real concern about some of the prosaic activities of day-to-day commerce, like using bills. So it's not just in industry, it's also in the most basic commerce. And so it makes sense that we have this catalyzing effect. So that might lead us to conclude that we're in the midst of a digital boom. And that's true in a sense, right? So if you look at some of these statistics, you see that within the economy, the industries that were already moving quickly and were digitizing have done better and better. And so those of you who follow the stock markets or participate in the stock markets, there is this herd movement into tech, because tech is obviously the natural location for digital transformation, and companies that are touched more by tech have to some extent weathered the storm better than many of the traditional economy companies, more sort of the old industry businesses. And we see that the performance is really split in terms of the quintiles of the top performers versus the bottom performers. So if you follow sort of the U.S. market, you may have the impression, oh my goodness, we haven't really taken such a hit because of the pandemic, but that's not true. Many of the companies are actually lagging, and it starts pointing to an interesting dichotomy, that on the one hand you have a digital boom, but you also have this analog bust, as we call it, which is the entities and the individuals that are not feeling the positive, if you will, sort of spurring effect of the current circumstances that we're in. And just to note that you have 50+% of individuals in the US and in many countries that are working remotely, but that sort of seems positive on the one hand in terms of digitization, but the other side of it is that the 50% or more that are not able to, right? So there is a situation of have and have-nots. And just so you don't get the impression this is something that's happening only in Europe or the US, if we look around sub-Saharan Africa, we see this really exacerbated in a great way, that the economic situation is actually, in aggregate, we have a loss of GDP, which is really being felt in many of these regions, many of the countries. And for sub-Saharan Africa, I think the estimates are somewhere between a contraction of 2 to 5% plus in 2020. And countries like Sudan are undergoing significant economic stress. And so where you have high concentration of the so-called analog economy, the pain is being felt even more so. And the Gates Foundation has noted that whereas the situation of extreme poverty had really improved in the past 30 years, from 1990 to 2020, going from 37 to 7%, what we're seeing now is slippage. So they've estimated that 37 million people have already fallen back under the extreme poverty lines, and the situation is only getting worse. What we're trying to point out here is this dichotomy where you have those that you might consider that were on the precipice of digital transformation, digitization. You can think of it as not the initial adopters, but those were sort of in the next quintile of individuals. And I'm now talking about whether it's people as consumers or small businesses or even beyond that, those that were on the edge of digitization and were trying, the public sector actors and businesses were trying to bring in to the digital world, those on the precipice have been nudged in. And if we just look at Egypt, a company like Fawry, which just a few years ago was sort of a payment startup, has done exceedingly well in Egypt over the past few months. And you can see the growth between, in terms of the share price of this company over the past several months, has really outperformed the Egyptian bourse because of its growth. So a lot of the Fawry story is people that were on the precipice of the digitization that stepped into digital activity. However, we note that this kind of performance is a bit of an aberration, because a lot of the high value customers are those who are acting within Fawry, who have adopted Fawry, and many of those who are on the precipice. But then if we look on the other side of things, and if we look at, for example, the performance of FNB and MTN and some of the big corporates across Africa, what we find is that they're already telling us, and we're seeing it in their results, that because their activity is mass market and it goes beyond sort of the top of the market, they're starting to observe slowness and weak pockets in some areas of their revenue drivers. And all of this sort of crystallizes in the statement at the top, which came from the managing director of the IMF, which is that COVID-19 has triggered a mass migration from analog to digital, but not everyone has seen the benefits. And the growing digital divide is set to become one of the legacies of the crisis. So again, haves and have-nots. Across sub-Saharan Africa, there have been concerted efforts from different governments, and we're just putting Rwanda, Ghana, and Kenya up here to try and manage this crisis. And particularly when it comes to mobile money, there's been a recognition that this is one mechanism by which to reduce some of the pressure. And so there's been an effort to remove some of the bottlenecks, for example, by removing fees or lowering KYC requirements. And that's had a real impact. And some of you may be living in Ghana or in Kenya or Rwanda, and you have seen these measures actually drive up some activity in terms of digital payments. But it's not so simple, and sometimes you can see that the strain is felt in other spots within the ecosystem. And so if you actually look at many of the markets, they're OTC or over-the-counter based, meaning that there is a lot of dependency on agents in order to cash in or cash out of the digital wallets or the mobile money wallets. And what we've seen is many of the agents have experienced sharp declines in their revenues, in some cases up to 60%. And so this can start triggering a cycle by which some of the agents have real issues and difficulties sustaining their business. That obviously impacts the access their customers might have to cash in or cash out facilities. And it's created a dynamic which can be quite dangerous in terms of how it affects the communities in which these agents operate, beyond the agent sort of well-being themselves. And so the question we ask ourselves, again, pointing that we have haves and have-nots, and a lot of this discussion today is centered around the informal economy and informal sectors, is what can we possibly do in order to deal with this phenomenon? And if we recognize that the gap is actually now widening across many of the markets that we're focused on, it points out to a simple dynamic, which is it's becoming much clearer to us that there are certain elements that are required in order to support some of the communities. Clearly, we all know about financial inclusion and the importance of having a financial account, but sometimes we don't recognize that also having an ID, whether it's a local government ID or a national ID, is a gateway to many of the services. And it's become a requirement in many markets to having a mobile phone, a mobile line. So there's actually a relationship between financial inclusion and having an ID and so-called universal access within telecom. And some call this sort of this digital trinity. And we think as Mondato that this is going to become a more important consideration to trying to address the gap which is widening in a more localized way, and especially when we're talking about the informal economy. So one of the ways in which we try and hone in on where the gaps are and where there is an opportunity to need to intervene and to assist is by trying to be more localized and look at markets less at the GDP level. The GDP can be deceptive. You might look at a 2% reduction in the economy, but you might have one group which is still sustaining itself very, very well and actually doing just fine, but you may have other groups which are really suffering. So we're trying to isolate where that's happening, where the gap is, and where the pressure is being felt. And we do this by starting to segment the markets in a geographic but novel way, because we give it a labeling which on the one hand, it might say a metropolis area is a segment, but you can have pockets of metropolis behavior in different parts of the country. So in this case, because we're focused on Mozambique for this discussion, for the upcoming summit, we've been looking at Mozambique a little bit and trying to understand what are the dynamics of the market. And we can see that there's really a very wide spread. So 6.5 million people live in 83% of the country, whereas you have 0.05% of the area which actually has an equivalent of half that population, and most of the activity takes place there. So there's more knowledge and more information on those kind of areas versus the remote areas and the rural outposts and small towns. And those are the areas we're really trying to unpack. So if we look at the information available to us now and trying to understand what's happening in Mozambique, the question we ask ourselves, what's been the impact of COVID? At a macro level, we have some sort of sense, but when we look at the available data currently, it's difficult for us to say reliably what has been the impact on the smaller towns and the informal sectors and some of the segments for which there is less available data. Even though at a macro level, things look not too bad, and within the sort of the GDP ranges we would expect, we're concerned about what's happening potentially at the more segmented informal level. And so one way forward in order to address some of these issues would be to try and just have sort of just a more robust approach to the data collection and undertake a more significant analysis at a localized level. And to give you an example of what that might look like, we might try and link together to see the incidence of population that have an ID, that have access to a mobile phone, and also have access to some sort of financial services. And if we're able to cluster the market based on that, what that would yield for us is insights on specific pockets that are receiving less support than is needed in order to sustain them currently. And that might be things like access to microfinance loans. It might be access, again, to ID schemes and to better connectivity so they can use the internet and, for example, for education and for commerce like their peers do in some of the more urban areas. The fact is that these types of activities work, and there are examples, and I'm not going to, for lack of time, I'm not going to show this video right now, but there are examples from places like Rwanda, and this is a story of a farmer who basically got a digital ID and got access to connectivity service and commerce services that really enabled them to interact with the markets more actively and to buffer some of the pain that they otherwise would feel. So this does work. The issue is to try and surgically get to the segments in the population which really needs that support versus the more macro type of interventions. We're going to continue this conversation today, and we're going to have additional sessions in the coming months. The next one will be on the gender gap, and we welcome you to participate in that and to make this an ongoing dialogue, because fundamentally what this is all about is to try and address some of the current points of pain which collectively are being felt and to isolate them and to see what can be done in order to make the digital transformation more inclusive. And with that, I'm going to hand it back to Ariel.
Thank you, Judah. We don't have any questions in the chat, but if someone has a question for Judah, feel free. While I hand it over to Esselina, CEO of Financial Sector Deepening Mozambique, for her presentation.
Good afternoon. This side we're still in the afternoon. Thanks, Ariel and Judah, and for this opportunity. I will ask Ariel to share my slide because I'm having some problem for sharing in this side. Ariel, can you help me, please?
Yes.
Okay.
Let me know when everybody's.
Okay. Thank you. After Judah's presentation about the general overview of what is happening with the digital financial service in Africa, and then in particular to Mozambique, I had an opportunity to share with you some of our early observations, what digital financial service are having consequence in terms of the COVID. Next slide, please. So I have organized my thought in 3 parts. So the first is to share with you what is happening, and then what are our early observations in different components, and then some close notes of what we observing. I have to say, the next one, please, that the first case of COVID in Mozambique happened in March 22nd. And since then, some different moments were taking place. I have selected some of them that I think that impact the whole things that we're observing in digital financial service. The government has stated a technical commission. It was the stage of emergency in March, which then ended up in September to the state of public calamity. And at the moment, we have more than 6,000 positive cases and more than 40 deaths. It is also to recognize that the two regulators, the central bank regulator and the telecom regulator, in that period of emergency, they've put in some management in order to minimize the hitting that the pandemic might have in the public, but also within the companies. The next, please. Here are some of the measurement that different regulators take. The central bank, the same that was happening as Judah was sharing in Kenya, it was also some wave in terms of the amount, in terms of fees, in terms of fees relating to SMEs. There were different measures in order to minimize the risk, but also to allow people that it is better to do more digital transaction than presential or cash transaction. And also some commercial banks also respond in different in terms of moratorium, that the one where for repayments, and also their call centers for the bank and the mobile money, and also for the telecom operator. They were fully equipped in order to respond to the demand, as at this moment more access for digital was more required. So what are we observing in terms of the impact? I will share here some results. The next, please. Some results coming from the impact of COVID in business and in the personnel of the business. The National Bureau of Statistics conducted a study April and May this year, and from that study it was stated that more than 90% of the business was affected, and when it's taken to the personnel, was more than 89 people were affected working in those companies. It is also important to note that those people that represent 3.7 million most of them, they are part of the head of households. And if you assume that the household in Mozambique has the average of 4.64, it seems that we are talking that the direct impact coming for the SMEs impact, we might be talking about more than the half of the population that was affected. But the other part that are not working in those companies that are here represented, that also they were affected. Seeing that the impact of COVID in the enterprise, either small or bigger, was significant. The next slide presents the characterization in terms of the category of the SMEs in terms of the enterprise, and we can see that the small business are the ones that are more affected. We are not here bringing those informal, particularly when they are not registered, they are not here, meaning that if the small business that were so much affected for the informal, so the impact might be bigger than the one that we are seeing here, particularly assuming that one of the management in the emergency state was to close most of the informal shop, particularly the one that are selling, that working as selling alcohol, they were closed, and many of them they could not continue. What the SMEs they have done in order to cope in the earlier days with the COVID impact. The next slides try to show what was happening in terms of the mechanism. We see that 2.9, almost 3%, they are completely closed. We see an increase in terms of teleworking, but also people that were reducing the working hours, which also might have impact in terms of the salary of the people, even they continue work. Contracts closed, so there were different impacts that the company took as adoption mechanism to cope with the COVID, but at the same time, those ones they have negative impact to their staff. Saying that, the government also, beside the different management that were coming from the state of emergency, we see that some government payments were coming during this period. I do have here in the next slide two examples that just came now. One is related with the process of renew driving license or because the driving license itself was closed, we see that it was developed a system which allow you to do your renewal of the driver license digitally, and also you make digital payment. This is a new service that came during this period of COVID. We saw also in terms of passport that it is now possible to do your appointments in order to get all the process of the renewal of a passport or having a new passport digital, which was not before the COVID. So it was that example of type of responding in terms of digitalization. But we see that also they still have some opportunities. For instance, when it's coming to provision of payments for vulnerable people, we see that it's continuing some manual or some presential process, which we do believe that there is a potential to have also those type of process for social affairs, humanitarian payments to be digital, or example of land payments, taxes that can be also digital. So it's to see that the government is also trying to digitalize in this moment of COVID. The next slides that I'm going to share with you, we did an analysis to understand what's happening in terms of transaction. What are the trend of transaction in terms of payments, in terms of what is going on in the banks and also in the mobile money in the financial sectors. We have made an analysis from January to August 2019 and this year. And in terms of deposit in the ITM, it is here in the graphic left, clearly showing that it is a high drop, in particular in May. Since the announcement of the state of emergence, we see that people are not making a deposit. This might be related to with the information that I just shared with you in terms of that many people that were affected in their job. This can also mean that people don't want to be more going to do the social distance or don't want to go to the ATM. There might be different causes, but the important is that fact is that the deposit on ATM has been reduced. At the same time that the withdrawal in the ATM also reduced in that period if you compare with the last year. Reduced to a negative, to negative trends. The next slides, we present the trends in terms of payments. In terms of payments of service, we have selected two basic services, the water and the energy. And the government's, one of the measurements was taken was that during the period of emergence, the bill of water, you will not be cutting the water access because of not paying, because one of the measurements in this pandemic is the hygiene in the water is very important. And it is interesting to see that although there is this measure for the governments, people, they continue making their payments of water bill. But when we see, well, it has been increasing the payments of the water bill, but when we see the electricity, we see a drop since April up to now. And this one maybe we'll need to understand better with the electricity provider. This might be that most industries that are closed, were closed in that period, and they maybe are the big one that are they're having a big bill to energy, and it was not here. But here it is seen that the banks, they are not receiving, they've seen reduction of payment of electricity bill, and they're seeing reduction, they're seeing increase or the similar way in terms of water. In terms of communication side, which is the next slide, the situation is different. In terms of buying airtime, is showing an increase. In telephone and the internet also. We can have here asking why January was so high in terms of telephone and the internet. That one was even before the COVID. Maybe it's because it's the holiday months in Mozambique, and many people maybe they're staying at home. But it is interesting that many people might be having access to internet, not direct for the internet provider, but using their airtime to have access to internet, because now many people that they are using. But it is important to see that in terms of communication, the tendency was to positive. If it's coming to the payment of service, we have select school and the television. Ariel, please, the next one. And as one of the measurements for the government was to close schools and the university, the results is here that it was a completely drop or reduction in terms of school fee. In terms of television, it is a drop before the emergent, but then in April, the first month that the message was stay at home, it was increasing, meaning that really that one showed that many people in April, they were staying at home, and even the government's report is showing that, but then people started to reduce, and for sure, when people that were at home, they were using a television mostly. So, what are the channels that are using for payment? We have selected here the payment of import and taxing to see what was happening, and also the payment of service. And it is here clearly to see that in both cases, the internet and the mobile payments were the most channels used for the payments, and the mobile, particular for the payment of service, was the king, was the means that was mostly used whereas for the payment of import tax was more internet banking. The use of branch to payment was in the low level, which is also in the tendency that many banks, many institutions were encouraging their clients to do payments via digital means and not presential or via cash. We have also analyzed in terms of subscription, in terms of the mobile banking and the internet banking. And the next slide shows that we do have more mobile banking subscribes. Those mobile banking are the mobile facility used within the banks. And not as much people are using internet banking. People that are more comfortable to use mobile banking than internet banking. And here are the example, the tendency that we are seeing for January to June. So based on those slides that I just shared with you, we get some points that we need to want to share with you. First is that since the state of emergency was declared, digital payments was increased, particularly when it's come to airtime, television, increased substantially. Whereas the use of ATM for deposit and withdrawal was decreased drastically. And this, as I was saying, might be linked to the different reasons: social distance, lowering of income because people that were reducing their working time, some they have lost their job, but also about the movement of using more digital channels. The third one is that there were no penalties were imposed in payments default of the basic service. This was one of the measurement of the government. But some businesses were closed. This might be allowed, showing us that in terms of electricity, it was this payments being reduced, but in terms of water, people will continue doing. And the last one is the impact on SMEs, and the big area of SME that were affected is more tourism that was completely closed. So it's those earlier observations that we are seeing, and I want to thank the national switch that was providing us those earlier data, the Millennium Bank that also shared with us what data he has in terms of payments, and also to share thanks to the central bank in provision of the information on the trends of payments. I want to thanks for this time to share, and I am open for conclusion, for discussing and question regarding those earlier observation, as we say.
Thank you, Esselina. We actually have a couple of questions. The first one is from Betty, CEO of FSD Zambia, for both you, Esselina, and Judah, if you have anything to add. And it is, what is the best way to get data and then continue to engage informal sector businesses across sub-Saharan Africa? And I suppose, Esselina, for you, would be Mozambique.
Thanks, Betty, for this question. The issue of data, of getting access for data, is a big issue. And really, I think that we as an institution have to do something if we really want to move to the digitalization, because it will not be possible to have the digitalization without data. As you can see in this my presentation, I was only bringing the earlier observation in terms of what's happening in the formal sector, in the banking sector. I didn't bring exactly what are in the informal sector, even the informal sector for the financial institution or for the financial sector, we didn't bring, because those data sometimes are not easy. And particularly those data you need now to go and ask people, make some survey. And within this moment of pandemic, there is also a big challenge. How can I have access to people who are working in the informal market, digital, if some of them are not digitalized? So I don't know what is the experience for others, but for us in Mozambique, it's really a big challenge and a big question that we still have in our table to discuss. But I leave that one. I don't have a specific answer to you, Betty.
Maybe Betty, that's a very good question, and I think there's a couple of points. One is the data that we have access to currently is substantially national data. And as you go into each of the markets, you can get some decent numbers at a national level, and occasionally you can go down to the regional level. The observation is that unless we're able to go more granular, more local, then our ability to really identify the impact of events like this, and just even once things get back to the so-called normal, to be able to identify trends in a way that allows us to intervene, if you wish, from a public sector perspective, but even on a corporate level, to just engage more meaningfully with the markets that we're looking to serve, is impeded. And so to the question, how do we get additional data? Number one, there are some good sources for data, which is more granular. Probably the best source is the mobile operators, because they have the most extensive footprint and from a distribution perspective and penetration of market. If you compare it relative to, for example, the formal banking sector. So certainly cooperation with the mobile operators is key, but the cooperation can't stop there. There needs to be cooperation also with formal and sort of alternative financial institutions and retailers and large distributors, in order to slowly piece together the puzzle. And every piece that one is able to bring to bear and analyze and get some insights out of leads to the next piece logically. Now, the next question you might say is, well, why would they cooperate with you? And from our perspective, the best way to forge cooperation is to actually add value to what these different players are doing. So no one is going to sort of spend all their time sort of trying to flush data out of their records just for, the sake of helping it on its own merit, or at least few would do that. So there needs to be some sort of give and take in terms of insights that are shared that can be helpful to specific businesses. For example, you may help a mobile operator recognize where their reach is not as extensive or deep as they might anticipate. It can be in terms of product penetration, and maybe helping financial institutions try and understand where it makes sense to actually have their own brick and mortar bank versus having some sort of agent banking model or alternative distribution models, which are more cost effective and ultimately yield bigger market. And the same is true across other parts of the economy. So it's a big puzzle. And in order to try and, really in a practical way move forward, it's a question of advancing sort of step by step and trying to make sure that there's some sort of value creation to the participants along the way in order to motivate additional data sharing and facilitating more analysis.
Thanks, Esselina and Judah. We have one more question that I'll pose to the two of you as well, though it is a good one, so we'll be continuing to talk about it during the panel. But Gulamo, CEO of Vodacom M-Pesa Mozambique, asks, what are the current views of central banks, and I imagine the two of you as well, on the continued push for free of charge mobile money transfer transactions, i.e. what is the current view on the balance between threat to operators' sustainability versus impact on consumers' pockets and materiality of the measures to stimulate the economic recovery. And I'll also just add that I don't want to put anyone on the spot, but there are some central bankers on this, and they should feel free to chime in as well.
Thank you, Gulam, for the question. I think it is a very important question, and maybe something that we will need to continue to discuss and to analyze, and also to make a balance on the side of the consumer, if we want also to make more people using digital, but also to see the revenue that the companies are getting, how we make the balance. It might be also important that we discuss this one, because we see that some of the management that we're taking after the emergence, the state of the emergence, is that was declared, is that some of the digital transaction, the fees were reduced or were even make it zero. The question is that when we come back to the normal, how will it be? Is going to be back in the same level? If yes, what will be the reaction of the consumer? But at the same time, I do think that if we want to do the digitalized financial service, we need to think in the side of the cost of the pricing of this type of services. We want more people, particularly the one in the last mile. We need to have other model of defining the price for this type of service.
Yeah, I'm not in a position to speak for central bankers. So if there is any of them on this call, I would encourage them to sort of offer their perspective. We can offer just observations of working with different players across the ecosystem. And obviously, there's the perspective from the public sector that any friction that constrains markets from functioning and from growing currently ideally should be removed. And so identifying fees on mobile money transactions is something that has been sort of common to many central bankers and something that's relatively easy to act on. And so that's why there's been a lot of activity there. From a mobile operator perspective, obviously it's sort of a double-edged sword. There's the concern that this makes activity non-sustainable longer term or less sustainable. The other side of that is if you can increase the overall volumes and sort of the movement of money within the system and creating more points of transacting and other types of fees, whether direct or indirect, which just increase the centrality of the system, then that can compensate and at some point more than make up for the lost income on the on the immediate reduction in the fees. So that's the argument on the other side. And obviously this is early days. It's hard to sort of anticipate how this will play out over time. But what we have seen for sure is the front end of it. We have seen the activity and the level of transactions go up and compensate in some cases where the in-person type of activity is not possible or folks are shying away from that. So I think really the toolkit available to central bankers and to other public actors is somewhat limited, and it's also somewhat experimental right now. And what we're hearing or what we're seeing is that there's really this effort to try and figure out on the fly what is the most effective measures that can be taken in order to facilitate sort of the ongoing sustainability and continuation and ideally growth of markets in the face of some of them shrinking. And again, the observation and the question is whether some of these measures, because the metrics coming out are macro metrics, are they actually funneling down and trickling down to where the support is needed most? And we frankly don't know the answer to that currently. And I think that's one of the questions that public policymakers are really trying to figure out and will have to figure out over the coming months if they're able to actually guide the reemergence of their economies from the current difficulties and have more visibility over what kind of growth they might experience in 2021, hopefully.
Thanks, Judah. If either of the central bank or former central bank participants would like to take this moment to respond, feel free, but there's no pressure. And otherwise, we'll pause the Q&A on this session and invite Dare, CEO of MFS Africa, to join on video and share his presentation. But we will continue to talk about these important regulatory and transaction fee issues throughout the panel.
Thank you, Ariel. Let me see. Can you hear me?
We can. Thank you.
Cool. Thank you. Good afternoon, everyone on this time zone. I'm talking to you today out of our office in Johannesburg, and I have a couple of slides that I'd like to share. Part one really about who we are as MFS Africa and what problem we're trying to solve in the world, and part two offer a little bit of reflection on COVID and how it's playing out in the market where we are in, and what we can take from there. And one of the key questions is actually the one that we're just talking about around regulation and what can policymakers do. Very quickly, so I'm Dare, I'm the founder and CEO of MFS Africa. In MFS Africa, we really recognize something in the world which we call the lottery of birth, right? Which, usually is the single most important factor on the prospect of your life. And the way I like to capture it is just, if I tell you where this picture is coming from, you can probably make some assumption about the prospect of these kids, whether this is Porto Novo, Benin, where I grew up, or this is Stockholm. You can make some assumption immediately about what happens. And unfortunately, when you are born in Africa, this still means lower odds in general. Yeah, things are just harder. And as much as we all recognize there's so many talents on the continent, opportunities is not that abundant. Now, one thing we do all share, whether we are in Porto Novo in Benin or in Zambia or in Mozambique or in New York or Shanghai, is aspiration. It's one aspiration to prosperity. And really, and you have probably heard this and seen for us, we really exist to make border matter less when it comes to payment. And what do we mean by that? It's just simply going back to that kind of Benin analogy. We all on this call take it for granted that we can always make a phone call to someone in Benin if I put the number here now. But I'm also pretty sure that most of you here will certainly take it for granted that you cannot make a payment to Benin if I say I give you the phone number here. And we just want to make that, we're going to change that. One mobile network at a time. I heard Gidebo on the call earlier. So we're doing this with M-Pesa in Mozambique, like we're doing with M-Pesa in Kenya, with MTN in Uganda, Orange in Niger, Madagascar, and more and more mobile networks around the continent are connected to the MFS Africa hub. What we do is to indeed identify and onboard those relevant digital schemes, primarily in Africa, but more and more around the world. We design and implement payment and payment-related use cases. The most common one for us is person-to-person remittance. And we build system and processes to support 1 and 2. In a snapshot, this is what MFS Africa looks like at the moment. So overall, we connected to about 200 million mobile money wallets across Africa. We used to say sub-Saharan Africa, but we most recently expanded into Morocco as of this week. And Egypt is very much on our radar. JJ was talking earlier about Fwari, which is one of the companies we are discussing today. And we all know that below the mobile money, actually there will be no mobile money without mobile money agents or cash out agents. So this is a number we also track. So our coverage includes now over 2 million of those. This is in 36 countries across Africa and a dozen or so outside of Africa. We connect 125 plus mobile money schemes. And if you're doing the math, you will realize that 410 corridors, which is a combination of 2 nodes, of those is a very small number. We should be doing at the power of 2, roughly. But the main reason why it's only 410 and not the thousands that it should be is mostly regulatory barriers. for when it comes to cross-border. And we'll talk a little bit more about that. As a company, we're about just below 100 people, about half of those here in Johannesburg, and the rest between Accra in Ghana, Lagos, Nigeria, Nairobi, and Kampala. And we do have a small team in the UK as well. So let me, COVID-19, now what? And we're going to take a little bit of a different, just to evacuate the question of what did we see as MFS Africa? Like JJ was saying, like many digital companies, we saw massive growth. We're now trading at about 2.5 times our total volume of business versus last year. We're probably going to end up the year with about 3 times. We have seen a sharp movement to digital from our existing, I would say, we as a network, we connect obviously diaspora members, so money transfer companies outside of Africa, like your Remit, your Azimo, TransferSpace, Zoom, PayPal, and so on and so forth, to mobile networks in Africa. But we also connect mobile networks in Africa to each other. And we have seen a pretty rapid growth since COVID between both categories. We have also seen a whole lot more appetite from non-traditional digital players, or let me say incumbent participants, to accelerate their move to digital. The recent announcement that MoneyGram made about their partnership with us to reach mobile money in Africa is testimony to that. And there are many more of those that we are working on at the moment. But I want to take the conversation a little bit away from this and just think a little bit about the long-term impact of what we are seeing now and what are the decisions we need to make sure that there is some sort of COVID-19 dividend when it comes to Africa. The first thing, we have to remember that entrepreneurship in Africa is still a lot about survival. Too many of entrepreneurs are actually just trying to get by. The numbers are well known. A lot of informal is mostly informal. The youth, which is kind of the next generation, is still largely employed and trapped in those survival type of businesses. And the cross-border element of the trade, and you have to read this in conjunction of the grand plan of the free trade zone across Africa, the prospect of that. How do we really take advantage of that, especially when it comes to cross-border trade in those different regions? And I think that's where probably there is a positive already about COVID. By accelerating so much of the digital and by bringing into digital world so much of the flows that required physical transportation, the taxis crossing the road, the people traveling and carrying the cash, we could expect a whole lot more sophistication or digitalization of even the informal sector. We conducted some surveys regularly about why people use the services. So we asked the users, why are you sending the money? Obviously, and you have to keep in mind that most of our service right now is person to person. So someone on M-Pesa in Kenya sending money to someone on MTN in Uganda. But consistently, we are hearing half of those respondents saying they're sending this for business reason. So although they're using a P2P channel, the underlying reasons why these monies are flowing from Kenya to Uganda, or from Rwanda to Uganda, or from Rwanda to Tanzania, is for business reason. And that might offer some hope against informality, if you think about it, that by providing more visibility, by providing that the convenience of the mobile cross-borders, we may be recruiting a pretty sticky cohort of users outside of the normal remittance cohort that we have, more like informal business traders that are moving into the digital and therefore could move into the formal sector. The other thing that we watch, and I was very glad to hear JJ's observation on this, we track very closely what happened to mobile money agents. When the COVID started, that was the first place that we started looking. Because at the end of the day, if mobile money agents are not operating, if you know anything about mobile money, you know there will be no mobile money. Okay? They are really the giants on the shoulders of which the industry is functioning at the moment. And you're probably familiar with this number, but it's still, the first time we did this slide was probably 5 years ago, and the gap between mobile money agents versus the other form of point of service for financial services were not this big. So if you see that over the last 5 years, we have increased that gap so much, and you compare it to bank branches, which if you see, in the context of Africa, we are talking about a factor of 100 between the number of mobile money agents that you have and the number of bank branches that are on the continent. And you will see that even things that normally will be an extension of bank branches, like ATMs, are not even able to feature in the equation here. So what will happen to mobile money agents in this time of COVID? And again, we have to remember that, Africa, so far the signs are really, really good about the health crisis. It looks like we may have avoided it, or at the very least it's delayed, and it looks like it will be milder across, but we're probably not going to avoid the economical crisis. And in South Africa here, we're already feeling the full force of it. Question is, what will happen to mobile money agents? And what will that mean for the industry? And what will that mean for things that are being built on top of the industry? So I don't have an answer, and I really hope we can engage on this today. But this is something that, as a company, we are paying a lot of attention to. Last but not least, and I'll finish here, while I preparing for this, I was looking if I could still find one of those posters of the 2010 World Cup in South Africa, where the rallying slogan was Kenako, it is time. I think if there's a time to make bold policy decisions about cross-border payment, it is now, across Africa. The first thing we have to recognize, and I want to salute every regulators in the room and who's not in the room, that for one, we have to acknowledge that this time there was a swift response, and by and large, the response has been positive across the board, across the continent. Removing of fee, extending, increasing the limits that how much you can put on mobile money, and mandate some of the services to go digital, are all policies that have been put in place, for which we will reap the benefits for years to come. And of course, there are some immediate or medium-term questions for practitioners, especially mobile networks, around revenues and sustainability of the service into the future. But I think the mere fact that we've been able to recruit more people who otherwise will not have used this, including people in the informal trade, as I mentioned, it's something that we will come to remember as a turning point. But we have to go further. This is not enough. And I think really in Africa, we have to recognize that behind, the remittance, the way we think about remittance, or policymakers are thinking about the remittance, is too much about the person in London sending money back to Kampala, the person in New York sending money back to Accra, or the person in Porto sending money back to Maputo. The lead indicator to future trade, cross-border movement, cross-border payment, is where people are going, migration. And we fail to recognize sometimes that 70% of people who leave Africa stay in Africa. They go to neighboring countries. The cameras are all on the people in the Mediterranean, but the real numbers are actually in Africa. So, and too many times the priority when we think about cross-border payment from a policy point of view is to that flow coming out of or outside. And when it comes to the neighbors, there's too much of a selective approach. I think we need to flip that, especially in this time where borders are closed, people cannot cross to go and rejoin loved ones. To recognize that if you are in Mozambique right now, it's important that transaction with Malawi is possible. It is important that transaction with Tanzania is possible, with the Congo is possible, with Zimbabwe is possible. So this is the time for policymakers to really take that into account, put it together with the free trade zone discussion that are happening, to really look at policy and make it much easier to move money between borders in Africa, just the same way that people are already crossing those borders without realizing. The second thing which is important is that behind remittance flows can actually be trade flows. And I mentioned the surveys that we've been conducting regularly. That's why outbound is important. Again, when we engage with policymakers across Africa, everybody is very happy to receive money, but nobody's happy to send money. So, well, for you to receive, someone has to send. And again, I'm not talking about sending from Europe or the Gulf, or is sending from other African countries. So why can't we make it easy for someone in Mozambique to import something and pay in Kenya just with using the M-Pesa? Why is it more complicated to do that than to do the reverse? What are we, so it is time really for us to engage in that conversation and not to think about remittance as a one-way flow. Of course, remittance could be both ways, but most importantly, what really is important here is the trade flows. That cross-border payment has to also serve that market, not just the remittance. We have to finally recognize also that, something that has worked so well in establishing mobile money as a de facto standard in so many countries is the proportional approach we took to regulation. The recognition that a $20 account will not carry the same risk as a $2,000 account. And everybody accepts that as normal today. And most mobile money ecosystem have been able to flourish on this recognition. But this is not yet true when it comes to cross-border. And I know that a lot of the tools to do this are not in the hands of regulators in Africa, because at the end of the day, if you want to clear dollars, you need to follow the FATF rules. You have to follow the US rules, essentially, about money laundering and combating terrorism, where proportionality is not a notion. But I think our voice matters too here, and policymakers need to advocate at that level, at the very level of Africa, for a more proportionate approach to money laundering and combating terrorism when it comes to cross-border transaction within Africa. Right now, you need to do exactly the same thing to move $2 between Mozambique and South Africa than you have to do for $2 million because it's a cross-border transaction. But I can tell you, people in Mozambique who are calling South Africa or the other way around do not feel the border. Maybe South Africa is a bad example here. You do feel the border here sometimes. But if you take other examples across Africa where people can literally walk across, that notion of that transaction being cross-border and being subjected to the same rules that clearing dollars anywhere else in the world will be, should give us reason to pause. And that kind of stuff, is it the right thing? And I think our policymakers have a role to play here. Last one, that's pretty obvious, the cash alternatives. I think a lot has been said. We have had a wide stage experimentation of full digital with COVID. We have to learn lessons from this and then push policy more into that direction. Last but not least, I think conferences like this, even if we cannot meet in person and have more coffee and discuss on the sidelines, I think they are still important, and I'm very encouraged to see that there's so many regulators in the room. I think it's important that we continue to learn as an industry and continue this dialogue to really, really make cross-border something that the whole, not just Africa, but the whole world can take for granted. Thank you.
Thanks, Dare. Harold, who's CEO of MHITS and Rocket Remit, just had a comment for you saying that speaking as a money transfer operator, he wanted to add that compliance and bank de-risking is also a main barrier why they cannot or do not connect to African markets.
Yeah, absolutely. And I think it should, again, proportionality should apply there. When you look at the average size of the transaction that we are seeing across Africa, it's about $50. And when you look at the North-South, it's about $150, $200. And we have to ask ourselves, should we treat this the same way we would treat a $5 million transaction?
Certainly. Thanks for that presentation. Very insightful. And now I will ask the panelists to turn on their video. I will continue to keep mine off so that I don't take away from your webinar debut. We have Antonia from Senfree. Okay, Judah thinks I should turn it on, so I will turn it on, my video. We have Antonia from Senfree, Lebo from Catalyst Fund, and Andrew from Pesakit. Unfortunately, Mr. Mushanga is unable to join us today due to some conflict, but we'll work with what we've got, and we have some very interesting speakers today. So I'll start by just allowing Andrew Lebo and to introduce themselves. They come from 3 different corners of the ecosystem, so I think that's going to make this conversation very interesting, and in particular, continuing the conversation about agents and about central banks. We're going to have some good content in there. So why don't we start with you, Antonia?
Good morning, good afternoon, everybody. Thank you so much for this really great presentation so far, and also the questions, which are a lot of the questions that we, and me in particular, are also grappling with. So it's great to hear that kind of overlap. So I'm Antonia S. I'm an engagement manager at Zenfree. We're a think tank based in Cape Town in South Africa, working mainly with regulators and private sector on digital inclusion issues. I am personally more involved on the payment side, remittances, cross-border and domestic payments, payment systems in sub-Saharan Africa, and more recently also leading kind of a digitalization work stream at the Remittance Community Task Force that was put together. There are quite a few groupings of different institutions on like task forces trying to help the remittances sector through this crisis, and also kind of develop the sector beyond the COVID-19 crisis. So it's very interesting that a lot of what we're discussing here is also discussed outside of the African continent, and that kind of work really kind of shows how we are really truly a global community, and this pandemic is affecting us all on similar levels. So I'm very, very happy to be here. Looking forward to the discussion.
Thanks, Antonia. Lebo, you wanna go next?
Cool. Good afternoon, everybody, and thank you for the opportunity to be part of this conversation. So my name is Lebo Mokhabudi. I am the country manager for Catalyst Fund in South Africa. And Catalyst Fund is a global inclusive fintech accelerator that offers venture building support as well as grant capital to inclusive fintech startups in 5 emerging markets: Nigeria, Kenya, South Africa, India, and Mexico. And we work with our startups in all these markets, offering the venture building support to build out their companies, as well as develop relationships with investors, circles of investors in all our markets, as well as corporates, in order to enable our startups to have pathways to scale. And we have one of our startups on our panel here, Andrew, who can possibly speak more on Catalyst Fund. Hi, Andrew.
Hi.
Go ahead, Andrew. Lebo took my job over for me.
Sorry.
I am Andrew Mtua, the founder and CEO of PesaKit. We are based out of Nairobi, Kenya. And we just started a small operation in Tanzania, and hopefully looking to grow to other different markets across Africa. So our main objective within PesaKit is to solve the supply side challenges of mobile money agents. I was very happy during the first presentations where Daria and the rest were talking about how agents are important for remittance, for P2P sending of money, or even just for wallets, so that people can come into the digital economy and transact. So our main focus is to make these agents more efficient, to have more money inside their wallets to allow for these transactions, and also to have more revenue generating sources. Yeah, so, and we participated in the Catalyst Fund from January to June this year. So a great branch of people, very interesting people. And I think one of the biggest gains from us through the Catalyst Fund was, I think, around March, midway through the acceleration process is when COVID-19 was declared a pandemic. And the Catalyst Fund was able to really help us become more agile, and also just to think more digitally. Because most of our customers are offline. Most of them are still using USSD or SIM toolkits to transact. So we had so many opportunities to see how we can evolve our technology, not only just on the onboarding, but also on the transacting side, so as to help them. So Lebo is great, and the team is very helpful there. So,
I didn't pay him to say that, by the way.
We'll see about that after. But Andrew, let's actually start with you, because this discussion about agents is obviously central to reaching the informal economy. And as Pesakit, you employed a couple of different products and strategies to respond to COVID directly. So as a service provider, would you mind sharing a little bit about your response during the crisis?
So when the crisis started about here in Kenya in March, the economy was still open. So the government restrictions that were starting to be put in place were allowing for people still to go to work and conduct business. Then all of a sudden, towards the last week of March, everything just became almost shut down. So the operating hours were limited. So everyone had to be home by 7 p.m., meaning you had to close your business at least by 3 or 4 p.m. Then there was a massive campaign against cash, and as we know, cash is still king amongst in the informal sector, and also just in everyday's life here in Kenya. Even though M-Pesa is still very prominent here in Kenya, and many people use it, I still find that the battle for M-Pesa is cash, because at times the cash transactions could usually vary between 95% and 90% of what is happening within the economy. So we still had a very small chunk of continuous digital transactions. So the central bank lowered the fees for transactions between $0 and $10, and also allowed doubled the amount we could hold within our own M-Pesa accounts, and also removed the fees or the barriers between people transacting from their bank accounts to their mobile money accounts. So what that happened was, and it's a mix of everything, including the inability to transact or even the inability for people to go to work, we started seeing that transactions at the mobile money agents started to decline. And in April, they declined by 25%. Then in May, it was about 50%. So we could see that the commissions that the agents were making from MNOs were at 50% at their lowest in May, and also towards the mid-June. And the challenge with that was most of them started closing their businesses, because most don't really have savings, so you don't have money to go to the next month. So maybe if you've already paid your rent for this month, you don't have for next month and the other month. So it was a mixture of so many challenges for the agents. So what we decided to do first was, the first intervention was just continuous education, what the government was talking about. So we started distributing posters, and also through SMSs and markers they could put in their shops for social distancing, so that just telling people, please step here and the next one after 2 meters, and just continuous campaign of the information that was coming from WHO and also from the Ministry of Health. And the other intervention we undertook was what we called, the second one, which was very popular, was we called it COVID-19 insurance cover, but really it was more like a hospital cash insurance cover that also covered illnesses or activities associated with COVID-19. And the cost for that for the agents was between $10 and $30, and that's still ongoing. So we still see many agents just going to the app and buying, or just going to the website and purchasing it. So what that gave the agent was, if they contracted, if they got COVID-19, or they tested positive, or even if they got hospitalized, or if they got quarantined, but within all those different interventions, all those different challenges, the intervention was having cash dispersed to them for every day that they miss work, and the cash could run for 30 days, and it could cover for the income that they were losing if they had to be out of work because of COVID-19. So that really helped in June, in between April and July, when most of the government interventions were, if you get COVID-19, you have to be quarantined within a government facility. And that meant you couldn't open your business, or you couldn't operate, or you had to quarantine for at least 14 days, or if you got admitted, then it was even an extended period of time. And the last one was for us to help agents to access float when they need it, because with the need for them to digitize cash, they had a lot of cash in their shops and less float. So the float exchange service that we launched was a service within small towns just to go and collect cash and provide the float that they need so that they can continuously digitize cash. So those were the 3 interventions that we undertook, all of them with different success rates. But I think over time we saw that most of our customers started appreciating that we were there to give them the right information to help them digitize cash. And also the insurance cover was a supplement to their day-to-day ops.
Yeah, thanks. Certainly financial education and just general consumer education is at the heart of a lot of these discussions, and something that you mentioned before, so I'll bounce it over to Antonia, is that cash is still king, and a lot of these markets are still dealing a lot with cash. So Senfree's done some really interesting work on some successful, some maybe successful, maybe not, but experimental approaches to confronting these types of challenges, both with central banks and with other players. Antonia, would you like to tell us a little bit more about that?
Yeah, definitely. So I think we've spoken quite a bit about the measures that have been taken by central banks in collaboration, or even often driven by private players. And I think we can only take our hats off for these kind of interventions. Mondato, you did mention on Rwanda, which I would like to also offer a little bit of insight to. So we obtained access to transactional data from RURA, the utilities regulator in Rwanda, to really understand in terms of P2P transactions, what did these policies of lowering or even having zero transaction fees, what does it do to uptake of P2P, digital P2P mobile money transactions? And as you already showed, it was huge, the success. It was almost immediate in terms of when these measures were introduced. Digital uptake increased, and it is a huge success factor in that just the sheer amount of volume and volume that flowed through the system. However, what was also already mentioned is we don't know whether that necessarily benefited those that need it the most. So in terms of access of digital services, what we also know is that cash is the kind of means in which digital flows. So you need to, just looking at kind of the business model of agents, if cash in, cash out is their main business, it just shows how important cash still is to people. The same is happening kind of with digital remittance service providers. If they speak of digital transactions have increased, it's true, but it usually kind of doesn't terminate, it terminates in a wallet, but then people still go ahead and cash out the remittance. So with kind of declining agent business in terms of cash in, cash out, the very real kind of digital divide threat is a very big possibility. And in terms of Rwanda, what we're going to observe now going forward, what is happening if those transaction fees are reinstated? Can we keep people in the digital ecosystem? And I think a lot of it kind of relates back to factors that we spoke a lot of before COVID, even that are just a lot more front of mind now, is that you just don't have, in many countries and in many kind of rural areas in particular, you don't have means to spend your digital value. So you are forced to cash out, and you need to provide that service to people. Otherwise, they can't meet their needs, and they're also less likely to hold digital value. So in a sense, you want to increase the cash reticulation in an economy to kind of make the switch between cash and digital a lot easier and a lot more seamless, so people can kind of observe and experience for themselves how much more convenience a digital transaction, especially over distance, for example, can provide. And a kind of different perspective, which I only found out today, about is Malawi, for example, also instated a zero transaction fee policy over 3 months with the 2 leading mobile network operators. And they have now reinstated the transaction fees. However, they have agreed with the mobile network operators that they would lower cash out fees. So it's actually a very new kind of, or at least I haven't heard that from any other central bank, but cash out fees are actually now the ones that are being reduced. So it will be very interesting to see, again, this kind of tension with the business model of agents, which rely a lot of cash in, cash out, but at the same time really providing that leg for consumers that cannot digitize at this stage to move to digital channels, or at least get that very much needed cash to get the economy going, never mind in the formal or in the informal sector.
Yeah, definitely. And a follow-up question on that I think also relates to the question we had earlier, but have you or the other panelists found any instances that prove that fee reductions are stimulating digital uptake both during COVID, and will that continue moving forward, or is it just pure need driving the uptake?
Yeah, it's interesting. So what we've seen from the Rwanda data is that a lot of people who were already transacting digitally are transacting a lot more. So it doesn't necessarily lead to higher entrance of new kind of customers. However, we have seen a disproportionate uptake by more women, interestingly, in the Rwanda case. So women were entering more new customers were female that were entering kind of the digital space. And they've also grown a lot faster in terms of volume of transactions. So not necessarily value, but just like it does show that there is a very strong convenience factor that once you're in the system, you do take it up. But I do believe that the transaction fees did play a very crucial role. In particular, also things like interoperability fees, the ability to transact seamlessly between the different kind of payment streams, which is also something that we've been kind of pushing and discussing even before COVID, is the need to kind of move to a more public good in terms of payment systems, like transacting being a public good and not necessarily a paid for service, and how that could work in an African context, and how could we put regulation and private sector as well as kind of the development community on that path to making that happen over time. But this is again like the fee reduction, as we saw in the comments now as well, they have been taken mainly on by the financial service providers, and it's not something they can do forever. So it is very much now on us to kind of create or use the momentum that COVID is creating to solve or investigate these issues further. And one thing that we have seen also from the other discussions is that the lack of data on consumer behavior right now, and kind of the need for more real-time data on this will be a key kind of crucial element that we can that needs to be developed and that we need to get access to.
Yeah, and I wonder, Lebo, in your experience at Catalyst and also in your long list of other sort of engagements dealing with these smaller to mid-size fintech companies, as Antonia mentioned, with lower transaction fees, that must be eating into their margins and their ability to produce revenue. So how is Catalyst looking at that as they engage smaller fintechs, and what role do you think investors have to play in terms of the upcoming year in investing in that sector?
Thanks, Ariel. So definitely the lower transactions and the effect of COVID on consumers affects in the fintechs, right? Something that we saw with one of our companies as an example is Spoon Money. Spoon Money offers informal traders in township areas credit. So they offer them credit to groups of informal traders. And because of COVID and because of lockdown specifically in South Africa, informal traders were not able to trade for a long period of time. And with no trade means no revenue, and therefore not able then to pay back their interest, pay back their loans, right? which affected Spoon Money. But what Spoon Money did and how they responded is much like how a lot of the relief funds responded, or how the financial institutions responded, in terms of how can you relax the expectations on your clients. So, for instance, Spoon Money, only expected their clients to pay back their interest portion only for that period of time. And surprisingly enough, the informal traders actually did pay back their interest portion. And as you know, the research says that females generally, hardly default on loans, and they pay back, and they're very responsible when it comes to credit and responsible finance. And they really actually did pay back the interest payments loan over the 3-month period during lockdown. So that's what we saw. And Spoon Money, had some sort of return. But how we responded as Catalyst Fund, and how we've helped our startups during this pandemic, is how can we create an environment where they actually leverage technology much more, right? We speak about, technology gives these companies an ability to access their clients, but with Spoon Money, how do we ensure that all their processes are tech-enabled? So from registration to onboarding, everything is all tech-enabled, because now they don't have an opportunity to go to a person's house to engage with their trader, in person. But how do they leverage WhatsApp, right? How do they leverage all the tech, even, leveraging our developers actually to build out these processes for them, to ensure that even the informal traders use tech. So another thing that we looked at is how do we leverage things like internet banking from Capitec, right, to ensure that people pay back their loans, using internet banking as an example. And also, how do you look at the whole ecosystem, right? As part of Catalyst Fund, we work with stakeholders within the ecosystem and really believe that in order for a fintech to strive, funding is one part, but you have to enable the ecosystem for the fintech to strive, right? To thrive, rather. And we looked at how can we enable informal traders to use other solutions like A2Pay to pay back their loan, right? How do we partner with other companies to ensure that people pay back the loan, as an example? So that's a Spoon Money example. Another example in terms of how should investors respond or help fintech innovators in the situation is obviously the patient capital and being a bit more patient. But why we exist as Catalyst Fund is to de-risk companies, right? To de-risk companies in order that they can actually raise funding. And be almost that bridge between the fintech and the investor. And we really did that. So to continuously engage with all our investors in South Africa, I work with 40i Capital, Kalon Ventures, and different investors who then can fund our startups, and really bring that bridge in terms of what is the progress, how are startups responding. But also what we saw our investors do is help the startups with scenario analysis. Right. So, what is happening? What is your current diagnosis of your money? But how to develop that scenario analysis? What is your run rate? And in the next 3 months, if you don't get revenue, what should you do? Right. And really get into the detail. So it was amazing how we saw investors actually get involved in the detail of the company, not just, okay, you're a funder, we give you money and, see to finish, but actually let's help you build the company. So, we saw our investors coming in and getting involved in the company, whether it's even through partnerships, right? In the season, we've actually seen startups partner with each other to actually, ensure that they are sustainable and that they survive, right? So as another example, we saw one of our startups partnering with another one to ensure that, they increase the digital value chain, right? To enable informal traders to get access to either essential services as well as access to credit. But I'll stop there.
Yeah, so interesting. And I guess I'll take one of the things that you mentioned, not to put you on the spot, but in those scenarios, and I'll pose it to the whole panel, the scenario where the profit margins don't increase over the course of the next 3 to 6 or maybe even longer number of months, what would you recommend, or what have you heard of investors recommending, or from a Send Free or PesaKit perspective of the best way to move forward?
Yeah, so that's a tricky one. I mean, ultimately you have to see can the business survive, right? Firstly, and some investors, especially development finance, has extended capital to startups where, you know, there is a possibility to survive, right? So as you know, a lot of governments have responded with relief funds, but we've actually also seen that from development funding institutions where they've also responded with some level of funding to carry the startups through, right? But the first thing is that can the startup actually be sustainable, you know, beyond COVID and in this new climate, right? Because some things have fundamentally changed. And is this company still relevant in this new economy? Another thing, what we've seen is that there's more of a focus on COVID recovery, right? And you know, innovations that are relevant to COVID, from an inclusive recovery and a COVID recovery point of view. So as an example, you know, startups that enable digital commerce, right? And enabling informal traders to order stock, get stock delivered to the spaza shop, for example, as well as doing stock management digitally, which then enables the spaza shop to become more digital and more formalized, which will then enable them to access credit in the future. Right. But the question is really, can this company be sustainable beyond COVID? And the other unfortunate thing is that some companies have died, right, as a result of COVID. But I also think in South Africa's case, as an example, is that the economy was not great before COVID anyway. And some companies died because, you know, like COVID became that slap, you know, the last slap that actually, you know, it ceases to exist now. I don't know if I hope I answered your question.
Yeah. Either of the other panelists want to comment?
I think from my perspective, in terms of just undertaking scenario analysis, what we've been doing internally at PesaKit is seeing how far the investment we have so far can take us, and also seeing the kind of partnerships that we can bring on board just to improve how our revenue outlook looks like. Because with the revenue, it also means you can improve your runway or actually just continue bootstrapping the business. The other option that we've been looking at is trying to find investors who are aligned with the vision we have, and also if there's something more they bring onto the table apart from just handing us over some money, which is good. But we also want investors who can introduce us to a portfolio of other companies who we can collaborate with, or investors who can introduce us to bigger companies. So let's say banks or telcos who we can integrate to, or even leverage them to launch into other different markets. So that's how we've seen this COVID scenario playing out for us.
Yeah, thanks. And I'm only going to ask the panel one more final question, but if there are other questions, feel free to put them in the chat. We have time for maybe one or two more. But we've talked about a lot of different aspects of change over the course of the webinar, from fee reductions and the way that companies are operating, also to KYC requirements and how that will be affected. So I want to ask the panel, and I'll start with Antonia. What do you think long-term will be a change that's going to stick even when we recover from COVID?
Yeah, that's an interesting one. I think definitely there will be some kind of move to digital for certain people that will stick. Those that were able to digitize have probably, and just needed a last bit of push, have probably found their way. However, there's so many people who are explicitly kind of excluded from digital services. And you mentioned, and KYC was mentioned, and kind of the need for identity. And I think that is really something that will stick in this post-COVID world, is the need for self-sovereign identity systems that can be accessed digitally. So the need for people to have power over their own identity and give service providers access, governments access to whichever use case or needs case that they have. But kind of the impetus around digital identity has already happened, and it's already looked at by a lot of central banks that we work with. there's a lot of misconceptions around kind of CDD requirements by customer due diligence by Financial Action Task Force, the FATF. They themselves have recently issued guidance around the concept of identity proofing and how, it's not how their guidelines have been interpreted to be quite static. However, under a risk-based approach, they're actually quite agnostic to what kind of identifier is being used. It can also be data and information, not necessarily a national identity card or anything like that is needed. And these technological solutions that enable identity proofing, or the concept that you can establish an identity based on your transaction history, and that KYC, or the outdated term of KYC, which is more focused on to mitigate compliance risks instead of being focused on the outcome of actually reducing money laundering and terrorist financing. That kind of concept of doing or verifying a customer only at the beginning of opening an account, that will be kind of moving to the background. And I think we're going to see identities established purely because people are transacting, and they can build a identity over time with information that is continuously being updated. And I think one last point kind of related to that is that we're also hopefully going to see, not a further decline in correspondent banking relationships, because we're already seeing that, but kind of a move away from the reliance on correspondent banks for intra-Africa corridors in particular, and kind of a move to more centralized hubs for foreign exchange reserves that kind of release the shackles of these overly overly concerned correspondent banks that still rely on overly kind of stringent KYC documentation, even though the regulator may not even require it. But at the end of the day, if you have a partner bank that is a correspondent bank and they require for you to collect all this information, then that's going to put you on a higher cost to compliance, and it's going to really seriously increase the risk of exclusion. So I think that is a kind of move, the identity and kind of self-responsibility of African nations to increase intra-Africa trade. And with the new agreement, Africa Trade Agreement, there is a big momentum together with COVID around that, and kind of, create infrastructure in the background that can support the digital flow of value, and hence actually encourage people to keep value digitally without cashing it out.
If I may go next, I think two things will stick. Definitely identity, but just to add to the point, it's also digital identity for businesses. So, and that I think also will get to a point where that will be shared. So whoever creates the digital identity for the business will make it available for other different providers inside the country, or even within regions. So in our case, let's say within the COMESA region. The other bit I think will stick post this pandemic will be interoperability. So the ability for us to transact from M-Pesa to another network, let's say Airtel Money, or for us to transact between telcos and banks. That for a long time had a lot of hurdles, both regulatory and also just the goodwill amongst all the players to do it. But here, what we observed in Kenya is once the central bank provided guidelines to remove the costs, and also to encourage the banks to transact with telcos, and also to increase the volume and the value of money that can be sent from bank accounts to mobile money accounts and vice versa. I think that will stick, and that may also stick across different regions and different countries. So I think those two items will definitely increase. Interoperability for P2P or for money transfer and remittance, and the other one is digital identity for businesses.
So added to that, I think what COVID did is created an impetus, right, for digital payments across emerging markets, definitely. But what we saw is that small businesses in South Africa, in order for them to even access the relief funds, they had to be formalized. They had to have some level of a record of their transaction behavior. And as we know, most of them don't. Right, the informal market is largely manual, and they don't really have a digital financial identity. And now, because in order for them to access those relief funds or any credit, they have to become more formal. So we've actually seen that spaza shop owners and informal traders are now willing to be formalized, to be registered as one, but also willing to use digital tools digital tools for their stock management, digital tools that enable them to actually get a digital transaction behavior, right? Because in order for them to access credit, they need to have that digital transaction behavior, and they're willing now to accept those tools to do their transactions digitally, and then they can access credit. And I definitely think that will stick, because they've realized that if we don't have this, we are left outside. What we're also seeing, even from a regulator perspective, is that there's more focus on SMEs being protected, SMEs accessing finance, SMEs actually being digitally included. So largely it's, mobile money or mobile payments has largely been a consumer P2P thing in all markets, but I think there's a lot more focus now on SMEs. So the conversations that I'm even having with regulators is, how can we ensure that SMEs get access to finance? How can we, even from a regulatory perspective, ensure that SMEs are protected, right? Our national credit regulator, for instance, largely protects consumers, but doesn't necessarily have protection for SMEs. So how do we ensure that we, enable SMEs to have, the protection from a national credit regulator perspective? How do we ensure that they have the processes in order to access credit? How do we also support innovators who enable SMEs to get access to credit? So that's happening a lot more now, and that I think will continue post-COVID recovery.
Yeah, let's hope so. And I do think SMEs are a very integral part of the conversation, especially when we talk about informal economy. And to just bring this all back around, we have one final question, but Judah mentioned the digital trinity earlier, which is this ID concept, but another part of that, and that's where I'll segue into our final question from Betty at FSD Zambia, is what do we do for those who don't have access to cell phones? What's the model for that, especially for very poor segments or women or others? Do we give them out for free? Does anyone on the panel, or for that matter, any of the presenters, have any response to those without access to mobile devices or communication networks?
Tough one. That's all I can say. That's a tough one. You have to, I think, I'm just thinking out loud, is that you have to have the necessary infrastructure, right, in order to actually play in the digital economy. And I think the answer is reducing the cost, or reducing, the cost of the actual infrastructure. So we need to enable affordable mobile phones and affordable smartphones. So you still need to have the infrastructure. I mean, I don't think without the infrastructure, I don't think you can actually participate in the digital economy at all.
For me, I think for those who don't have phones, probably a model that could work for them would be similar to, or just the pay-go model for smartphones or feature phones, where somebody could be given a phone and they pay over time, and the payment could be from the usage, so from the minutes they spend, or the SMS, or even the mobile money transactions, because that could be an incentive for either telcos or even the regulator to try and take, or even guys bigger than. I think that probably a telco will do that, could take that risk, because for them, if you have one more subscriber, there's potential for revenue over a very long time.
I agree. I like that, Andrew. And I definitely agree with Lebo on the infrastructure. And I think with that come also considerations like how are those devices going to be charged? How much are data costs? Like how can they transact? Is it USSD? And USSD can be expensive. Data can be expensive. And I think, again, this kind of consumer protection angle comes in as well. So I think, again, yeah, I agree. It's a tough one. I think there have been pilots with handing out cell phones in India that we could potentially look at. I'm not so sure what the outcome of that was, however. So it will be good to review, but it's definitely not just the access to the hardware, like was discussed already.
Thanks. That was a tough question that you were unable to prepare for. So I'm impressed with all of your answers. And with that, I recognize that we're sort of at the end of our time. I wanted to thank our panelists and presenters. I think this was a very thought-provoking and insightful conversation. We look forward to more. Feel free to continue on the chat to respond to questions. I'll leave it open for the next 10 or 15 minutes. And presentations will be made available, but the presenters will have about a week or two to review and prepare for distribution. And a recording of this webinar will also be made available. So with no further ado, I will just hand it over to Judah for final thoughts and conclusion, and wish you all a very safe and healthy end of week.
Thank you, Ariel, and thank you very much to the panelists and speakers. Personally, for me, this has been a super interesting dialogue we've engaged in for the past, I guess, close to 2 hours. And as far as we're concerned, a lot of these discussions are all around sort of how things have transitioned, what else can be done. And that also relates to these kind of sessions. The traditional model has been to get together for a day or two in some location and have an intense series of sessions, keynotes, panelists, debates, and so forth. And as the world adjusts, so are we. So this is the first of what shall be a series of discussions, and they're only as successful as the kind of dialogue and inputs that we receive. And so this session was pulled together in conjunction with FSD MAC and our other partners, to which we are very thankful. But we encourage you and welcome you to offer inputs and suggestions as we take this series forward. And this is not instead of summits, this is in conjunction with the summits, which shall carry on once things are more or less stable across the various markets where we all operate. And the next session is intended to take place in December, and the contemplated topic for that one is around the gender gap and what has been observed, again, as part of the adjustment with COVID, but more generally. And other sessions will be planned into the new year. So the next session, again, will be in December or January. Stay tuned. You'll receive correspondence on that. And if there are other topics that you think ought to be prioritized in terms of the many that we can spend time delving into, please let us know. Let us know your thoughts, and also we would welcome feedback on what went well and what could be improved going forward on these type of discussions. And with that, I will once again thank everybody who has participated, both in presenting and in the panel, and the wonderful questions that are flowing across the chat room, and look forward to having the next session. Thanks once again, and wishing you all a very pleasant continuation of this day.